Lyft will report earnings today after the closing bell. It is Lyft's first earnings report as a public company. Now, the stock is down about 20% from its debut. The earnings report comes just days before Uber is set to go public. And joining us now to discuss both is Wedbush analyst Ygal Arounian. Hey, Ygal.
Hey,
thanks for coming on.
Great. Thanks for having me. Great to be here.
Let's talk about Lyft. You know, there was so much hype for that IPO, and then in the days to follow, even now lawsuits coming at the company for overstating its market position, kind of overhyping itself. And that has become the litmus test, I think, maybe unfairly for all the other tech IPOs.
Yeah.
Every hot unicorn now, everyone says, well, look at what happened with Lyft, which I think might kind of not be the right way to approach it. But tell me how you feel about Lyft and maybe if you guys are bullish moving forward.
Yeah, so I think Lyft was it's really early days still, and a little unfair to judge them like that coming out of the gate. Let's let them report their first quarter earnings, give some guidance around their metrics, and kind of see how things go from there. They were in a little bit of a tough position trying to beat Uber out of the gate. They may have maybe overpriced a little bit, got a little too excited. I think that's led to some of the challenges we're seeing here as people kind of wait for Uber to come out as well. But let's wait and see where things go and not jump the gun.
Yeah, when we know that Uber is coming up and Uber has broken out its Uber Eats business, calling that, $20 billion in value. And I think some people are a little skeptical about that, but might we see the same kind of problem with Uber in the first few days of the overhype in the first few hours and then maybe it sinks really fast? I mean, what are you expecting for that debut?
We could, but I think Uber's taken a much more careful approach to coming out of the gate than not than Lyft has necessarily, but learning from the Lyft lesson.
Yeah.
Lyft raised its price range, its IPO range, and then priced at the high end of it. You've heard Uber kind of come down from their $120 billion valuation. Now they're in the kind of the 80 to 90 billion. We came out with a $100 billion valuation price target on it going forward. So I think they've taken some of those lessons to heart and are pricing accordingly.
So you alluded to this in your first answer, but initially we thought it was a race to go public. Does Uber actually end up benefiting after seeing Lyft's trials and tribulations, and now at this point, maybe that was their plan all along?
Yeah, I don't think Uber had to kind of come out of the gate the way Lyft did. Lyft's much smaller, it's domestic only, it's rideshare only. Uber's clearly the leader in the space and global. I think Lyft had kind of probably a little bit more of an incentive to come out before Uber. That's the advantage that Uber has. Had the chance to sit back and wait and see what happened with Lyft and then go from there. So I think they are in a better position.
What's the most common question you get from your clients when it comes to these companies?
Profitability. How do
lack thereof.
Yeah, exactly. Well, the path to profitability, to be clear. Can they ever get there? The competitive dynamics, pricing, and discounting is a huge thing. Uber came out, stated really clearly in its filing that they'll discount as long as everybody else is discounting, and I think that's part of their advantage. They've raised a lot more capital than anybody else has, and they could be competitive for longer than anybody else.
So what's your view on their path to profitability? And I guess when I look at the two companies, it seems to me that they just need to raise prices or increase the take they're getting from their drivers. How do you see that dynamic playing out going
There's
forward?
a lot of things. So first of all, I think investors need to be patient. It's going to take a while. I think Uber's been pretty clear in stating that, don't play this as a near-term profitability. If you want that, there's probably better stocks for you, right? You're thinking about the big picture. They have a $7 to $8 trillion market when you think about the long term across all their countries, across rideshare and Uber Eats and freight. So it's about thinking about that market, how they attack that market, and how they can get profitable over time there. I think their scale gives them a big advantage, but either way, you're going to have to be patient with it.
I mean, in one of your notes, you say that there could be a new member of the Fang Club that you could put. It could be a Faung.
Fong.
It's just Fang with a U, but
yes.
I mean, you could go Fong, yeah, whatever. We'll see where it goes.
It could join the likes of the Amazons of the world.
Yeah, I mean, think about where Uber is already. It needs to get profitable. Obviously, it needs to have the metrics behind it over time. But right now, they're already global. They're playing for, like I said, an $8 trillion market. That's a really powerful position to be in. They're clearly the leader in every market that they're in, and the markets that they're not, they have minority stakes in the leaders. That's a great position to be in.
Yeah.
All right, Ygal of Wedbush, thank you so much.
Great. Thanks for having me, guys.
Closely.
Yeah.